Good afternoon, everyone. Time for another gold and silver update. I'm JR. Today's the 26th day of February, 12:30 p.m. Eastern Standard Time. So we're looking at the gold chart here. We can clearly see that gold has been finding support during this long-term trend line here, stretching back since 2000, actually, since 2000 when the bull market began here. All right, had a big move. Since then, we've consolidated, and we've actually broken this downtrend. I've said it numerous times. I believe on the long-term charts, these suggest higher prices. We're back in a bull market. 1500 is my target here for this year. Within the next 3 to 5 months, that's my target around 1500. Currently, we're not going to get to 1500 though until we surpass 1370. I think a move above 1370 is going to prove to be very bullish here for gold. And once we surpass this level here, what I would look to do is move something like this, where we come back and then we test the $1,500 area. That's the monthly chart here for gold. Let's look at a closer chart here. So we can see that the market is attempting to go higher. Still a lot of sellers over here, so we got to get rid of all those sell orders before we continue to go higher. Again, the more time we test this 1370 level, the easier it'll be for us to break out of it. A move below 1300, I would think, will probably be not so good for the metals, although I don't anticipate a move lower than 1300, simply because during this time, this is really the seasonally, gold should not retrace so much. Now, we are going to have interest rates. I think they're going to rise again next month, so we might see a little bit of a pullback. But again, we can't necessarily look at these short-term time frames in order to predict these long-term moves. I would assume that the market is going to continue to find some support here between the 1200 area all the way up to the 12 and 3/4 area. Again, this is the area to buy. You want to stay along this trend line here. And if it's not now, it'll probably be within the next 2 to 3 months. But I do expect 1500 here by the end of this year. Let's look at silver. All right, silver again. Making some attempts to go higher. I guess for silver here, the key number is around $21. Above $21, we can see this metal test at least a $25, $26 range. Again, possibly correcting and then continuing to go higher. Again, like I've said before, once we break that level, once we break a high, usually you see a much bigger high. So again, I anticipate that once we break this level here, we're probably going to go up significantly, maybe test a $25 to $30 range. And again, which I do expect this thing to happen within the next few years, maybe a year or two. Once we move above 49, this chart is just going to shrink and this thing is going to hit the $150 mark. That's my analysis here on silver. As far as gold, I wanted to share with you guys quickly a short-term trade here. So again, this is the target here for gold. So this is really the trend line. All right, so it looks like gold is respecting this trend line here. If we fall below 1320, I think 1300 is inevitable. The market is, I think, is attempting to move higher. We have a weak dollar, so I'm going to try to push this thing to at least the 1344. That's my first target on this trade here, and the second target 1370, a 1365 or so. Above 1370, again, we're going to get really serious and go to take this thing to 1500. Let's look over at Ripple. So again, it's really difficult to look at these short-term time frames. But again, this is the weekly chart. We can see this is my accumulation zone here. Anything under $1 is really where I'd like to accumulate. If you haven't been accumulating Ripple, this is your time. I think around this area here, I think that's when the buyers are going to come. Let's say we give this thing another 6 or 7, 8 months. I think this market will easily start to rise here pretty soon. So that's Ripple. Again, not really much to analyze besides the fact that we are finding some activity down here where we expect it. Okay, so again, under $1, that's the time to get in. Right now we're just under $1. I think anywhere above 35 cents and under $1, that's a good buying range. Ultimately, I'm assuming that this is going to shrink and this is going to take off. Again, my yearly target for this within the next year, not necessarily 2018, but probably by February or maybe half of the middle part of 2019. I expect $8 to $10 prices, much higher. I've heard $18 this year, but only time will tell. Let's look at the Dow Jones. So Dow Jones making higher highs. I believe the Dow Jones is going to start correcting here pretty soon. This is a big indicator. There's a lot of sellers up here. If you haven't shorted the Dow Jones, my idea is to short the Dow Jones around this area here, just below the $26,000 range, with maybe a stop loss just above 26 or maybe even 27,000. I think the risk to reward is great, and I think this market can easily test the $22,000 range. Again, risk to reward, if you get in here on 25,800, I think your risk is roughly about 1,000 points, and the reward is probably around 5,000 points, maybe 4,000 to 5,000 points. But that's if the market continues to decline. But again, just a lot of volatility and yields going up, and it just doesn't look like the Dow Jones or the market is going to have the legs to just continue to go to 30 or 40. But then again, who knows? Definitely a good time to take some profits on some of your long-term longs here. And last but not least, we'll go over the U.S. dollar. So the U.S. dollar, again, having a hard time going above the 91 area. I've said it before, 90.50 was a big area here for the U.S. dollar. Has not been able to go above. So again, support now turn resistance. Doesn't look like the dollar is going to go above 90.50. If you're going to trade this and you're trading this long term, you want to trade it against this high. Okay. That's the high you want to trade it. So no matter where it goes, you want to trade it against this high and assume that we're going to continue to make lower lows. If I look at the monthly chart, which is a long-term chart, again, we had this really ugly broadening formation, very bearish for the U.S. dollar. It looks like it's below this broadening formation. Again, traded against the 95. We should go, the first target is 84. The second target is 79. And longer term targets are going to be in the low 70s. Eventually, I think this will break. I can't say it'll happen in the next year or so, but I think the bear market has begun, and much lower prices are upon us. All right, I hope you enjoyed the video. We'll see you guys next time. Bye-bye.